Hey guys, John here with a silver update. I sort of thought twice about even doing this video, but I thought, you know what, I'll just suck it up and put the info out there. That's why you guys have subscribed to hear my thoughts on the market, so why not? Volatility in the markets at the moment, massive volatility. What is volatility? It's basically big up and down movements in the market, any market. So, you know, silver might have a $1.50 up day, followed by a $1.50 down day. Constantly, you know, over a period of a few weeks and months, you're just seeing the price isn't doing all that much, but in the meantime, you're moving a lot in terms of swings up and down. That's volatility. Now, volatility happens at tops and bottoms of markets. Doesn't mean it only happens then. The trend can certainly continue after a period of volatility, but it's something we do see at tops and bottoms of markets. And if you want some analogies, you got the tug of war game, Team A, Team B. Team A's got control, and then as Team B starts to win over, you get this period of violence, volatility in between, and then Team B takes the reign of power. You know, you see it in things like even in nature, in society, where governments are overthrown. Like, for example, Egypt or otherwise in the Middle East, you know, government A is in power and government B rises to power, but in between you have this period of volatility in the socio-economic scene. So, you know, even in physics you can see it. You know, when a piece of matter transforms from something to something else, you often get a period of instability within the matter, and before it eventually becomes what it's transforming into, there's violence at a chemical, molecular level. So it's a natural phenomenon, and really what you're seeing is just the transfer of power from one side to the other. So there's a reason why we see it at tops and bottoms of the markets, I guess is what I'm trying to say. You know, in the market sense, it's, you know, the bulls and the bears really fighting it out and seeing who wins. Now, despite the sentiment, despite all the reasons why I think silver will obviously long-term go up, and all the things I'm seeing in the market, you know, this is why it's hard to do these videos, because my mind says one thing, and then what I'm seeing on the charts and what I'm feeling from the market saying another thing. It's very conflicting, and it's quite hard as a trader to know what to do. Do I follow my long-term emotions, or do I trade what I'm seeing at the markets and things like that? It's very, very difficult to do. So you just have to process information as best you can. And the fact is, I think we're due for a significant correction, despite what all the reasons why we shouldn't be, if that makes sense. And I think, and this is just my brain trying to see how it's possible that gold, or actually more silver, I don't know what gold's going to do. I'm not getting the same vibe from gold as I am silver and the stock market. I think silver and stock market are heavily correlated at the moment, not so much with gold. I don't know what's going on there, but I think we're due for a correction in the stock market and the silver market. Now, I'm trying to think what could be the precursor to a correction in these markets. How could, with what we're seeing inflation-wise, with what we're seeing fundamental-wise, with what we're seeing money printing-wise, with what we're seeing, you know, economically, how can these things possibly align themselves for some sort of correction when the money that's used to buy them is losing value at a massive increasing rate? Well, there's two things. There's the debt ceiling. Now, there could be a lot of hum and ha before they eventually do raise the debt ceiling in the US. They might pretend like they're not. I know I'm reaching here, but I'm trying to find reasonings to justify what I'm seeing in terms of volatility. They may sort of play this thing for the strength of the US dollar for all it's worth. You know, no, we're not going to raise the debt ceiling and make a big dog and pony show about the whole thing, and that'll give significant strength to the US dollar. So that's one thing that could happen. The second thing, which I believe they will, obviously of course they have to, but if they postulate that they won't enough, then it'll probably scare a lot of people out of their speculative positions. And the second thing is QE3 is being factored into the markets, and the way I know this is with every bit of bad news that the US is getting, home sales, consumer confidence reports, everything is bad for the US at the moment. I think there was only there was one bit of good news out of a spate of 10 in the last 2 or 3 weeks, and so the news is quite negative, and the markets are rallying off, especially the stock market, off this news. So that leads me to believe that QE3 is being factored into the equation, and generally speaking, I think the sentiment is that most traders do believe that QE3 is an inevitability. Now, I can't remember who it was on King World News. It's one of the, could have been Jim Rickards, who sort of mentioned that the QE doesn't need to, the Fed doesn't need to formally announce QE3. They don't need to, in effect, print more money or monetize the debt. They have 700 billion, I think, in maturity, or 700 billion a year of debt maturing, or something to that effect. Yeah, I'll try and find the link and put it below. I can't remember the exact numbers, but whatever it was enough money so that the money from that maturing debt could be used to refund more purchases from the Fed, from the Treasury, so that they don't need to formally allocate more of their balance sheet to new purchases from the Treasury, but that they could revolve the current maturing instruments in their balance, in their books, to allocate that back to Treasury debt, so that they could pretty much say they're not doing QE3, but still use the QE2 maturing funds to monetize the, well, not monetize, but rebuy Treasury securities. I'll try and find the link, put it below. But that's sort of what I'm thinking could also disturb the market. If Ben Bernanke says, no, we're not doing QE2, then we could actually, QE3, sorry, I'm stumbling all over my words. It's sort of just doing this ad hoc, but I'll get there. If Ben Bernanke doesn't come out and say we're not doing QE3, then the markets will suffer a significant hit, because I think it's being factored in. And so they're the only two things I can see bringing down these markets, because everything else points to higher prices. And naturally, I believe that's just a short-term blip in the longer-term picture of the gold and silver markets. Obviously, there's not going to be any sort of penultimate top in silver, and probably not even the stock market, even though I'm a bear on that sort of, on stocks, on traditional stocks, on retail and all that sort of stuff. So that's just my thoughts at the moment. I hope they sort of mean something. I hope you can gain something to it. I get a lot of people asking me about, should I be buying silver? Tough question. Tough question. I can only tell you what I'm currently seeing, currently thinking in the market. So that's it. But you should always have a core position. Always, always, always have a core position in silver. Talk to you soon, guys.